Hi everyone, it's Darren and I'm going to do a video on the daily time frame. I've been promising videos on the daily time frame for a while, but the honest answer is what I was doing wasn't really working on the daily time frame. So I've just been kind of looking at things and trying to tweak them and see if I can find something that's sort of worth exploring on the daily time frame. So what we're looking at the moment is this idea of trend trading and high risk to reward, okay, combining the two. And I know we're sort of constantly told that's how you make the best returns. Not saying that's the only way to make returns, but there's certainly a lot of evidence to support the idea that it's a good way to trade. And I know there's a lot of people that want to trade on the day. I'd like to do more trading on the daily time frame myself, especially if I could automate large elements of it and just have it running on a separate account to any intraday trading I'm doing. So essentially we've got three market conditions that we need to deal with. Okay, so let's call this A, this is B, and this is C. This is the euro dollar. It's quite nice because we've got three clear examples of what I need to talk about. And A and C are very similar actually, but A is basically prices trending. Okay, but it's a slow grinding trend with deep pullbacks. Okay, so this is the first market condition that we need to deal with, we'd like to see some profit in these market conditions. The second one is a strong sustained trend. Okay, this is obviously where you're going to make your money, and you need to your system needs to make big returns in these market conditions. And then the third one is essentially a sideways market, and here we want our system to we're not looking to make profit here, we're just looking to reduce our drawdowns in these periods. Okay, so those are the three market conditions that we need to deal with, and then there's the three elements to the strategy. So element one is the trend and picking the direction. Okay, really bad for writing with this. I don't know why I'm even attempting it, but you get the idea. Okay, so point one is the trend selection. Okay, so we want something that's going to keep us in these very gradual trends and obviously the steep trends as well. When price is moving sideways, it doesn't really matter what you use. It's not going to be of any benefit there. So what I've found works best is a slow changing trend filter. Okay, so something that changes slowly is going to keep you in these very strong trends, but also it's not going to chop long and short in these trends which still have like potential in them, but where price retraces very deeply. Okay, so we want a slow indicator for the trend. And on the daily here at the moment, I've just got a 200 period simple moving average. Okay, and it could be 240, it could be 120. Essentially, we're saying it's not quick changing. It doesn't have to be a moving average either. Obviously, you can use whatever you want, but you need to find something that's going to work for these types of movements and these types of movements as well. And in these movements, there's not really a lot you can do about it. Okay, so that's the first element dealt with. The second element is you need a system for entering into these trends. And take a few of these lines off. Okay, now the entry, likewise, if you traded every bar that closed bearish in a bearish trend, it'd do really well in these periods. Okay, it wouldn't do so well in these periods because of these deep retraces. So you'd get a lot of losses of positions you built up when you get these deep retraces, and likewise it would do terribly in here. Okay, so trading every bar is too aggressive, but at the same time you want an entry system that's going to get you stacked in these periods, and you know, really bring home big returns. Okay, so what we want to do is we want to secure the swing points. Okay, because in these grinding trends here, you're going to catch some big wins, which will make these periods profitable. You can still get these big returns in these trends, and you know, you can try and limit your losses in these periods here. Okay, so if we just let's just zoom in a bit on this period here. Okay, now my moving average hasn't got enough data to draw here, but essentially the slow moving average is below here. Okay, and this is all a long trend. Okay, so let's start right down here at the low. We look for price to close up, and we look for a breakout of the high, and we put our stop under the low. Okay, now we want to add to that position if it continues to trend, but as I outlined earlier, if you just add on every bullish bar, you get a lot of trades stacked up, but these deep retraces cost you dearly. Okay, so to deal with that, all we need to do is only add when price has made a positive push in that direction and it's retraced, so you're looking for the next swing point. Okay, and then if price retraces and knocks this one out, then you can add again, as long as you're adding on a new level. So maybe you'd wait here and then add another position here and wait for price to move again and add another position here. Okay, and then add another position here. So you still get your positions stacked up, but when the deep retraces come, you're not knocking all of your positions out. Okay, and you're managing your drawdown until you get those one or two trades that go to your big risk to reward and give you some profit. So if I just move on to the nice period here, you can see here, take a trade here, wait for price to move, add another trade, add another trade. So, you know, essentially you're spacing your entries out a bit more. Okay, and you see in the long sustained trends, you can still make really good returns. And if I go on to the period where it ranges, so if we took a trade here and stopped out, and then we say we took a trade here, stopped out, took a long here, and you see we don't really get an entry at a new level here and here. They're essentially the same one as here. So then when it comes back again, you're reducing the amount of losses you take in the consolidation periods. Okay, so it's essentially, you know, the same as I always do with my entries, trying to secure those retrace points, but we're just allowing a little bit more space between the entries, and waiting for a pullback so we can secure these swing points. Okay, and so the final element is when to take profit. Okay, and I've been running tests on 4-to-1 risk to reward, and in the tests that seems to work really nicely. It seems to have a positive expectancy. Obviously it depends on how many of the strong and the slow trends you get and how long the consolidation periods are. So I was quite happy with that, and I did have a look at some old articles that always struck home with me, and this one is from No Brainer Trades, and he kind of trades, he does some trend trade, and he does some counter trend trading, and he wrote this article on optimizing stop loss and take profit placement, and one of the people who followed his blog did some back testing on this idea, and the interesting thing to me was this was his 4-to-1 risk to reward back testing, which generated £18,500 dollars of profit, and had a 45% win rate. And the interesting thing to me was he went from 4-to-1, he went all the way up to 10-to-1. And what was interesting to me was as he increased his risk to reward, the amount that the win rate was dropping, it wasn't linear. Okay, so as he increased his risk to reward, the amount that the win rate was dropping, it was dropping by less each time. And when he got to 10-to-1, he made 43. So he went from $18,000 to $43,000. Okay, so it did get me to thinking. We presume that 4-to-1 is a high risk to reward, but is it really? Is it just is it at a level where it starts to feel really uncomfortable holding your trades? And then the guy who owns the website went on to do his own testing on the same, because they basically all trade the same strategies, on the same strategies, and he stretched it out to 25-to-1. And the interesting thing was that let me get to his figures. Okay. So his 4-to-1, he went from 10-to-1 to 25-to-1, and his 10-to-1 risk to reward made $99,000, and his 25-to-1 made $147,000. So, and the win rate again didn't drop dramatically from 10 to 25. I think when you get out so far within reason, because it depends on how far your stop is away as well. If you're looking for a 25-to-1 winner, you need price to move in a way that it never has, say like 10,000 pips, then the optimal is going to peak out. Okay, and we're not necessarily looking to find the optimal risk to reward, but we want to be up there. We don't want to be trading down here, because we're missing out on a lot of potential. So anyway, the point I'm getting at here is that although 4-to-1 feels like a big risk to reward, is it really? And are we kind of missing out on an opportunity to make a lot more money for less work, if you like. So going back to the charts, I really like this idea of stretching this risk to reward now. So I'm going to start looking, and I haven't run my own back tests yet. And as ever, I'm just putting ideas here. The idea is trading for a higher risk to reward with a simple system. Is it what everyone makes out it is? Is it one of the best ways to make profit trading? That's all we're trying to explore here. So I'm going to start stretching out my risk to rewards and going for much more like a 10-to-1 risk to reward. Now the only thing, the other part of the so that's kind of covered the exit. The other part of the trade management, which I haven't talked about, is moving stops to break even or trailing. And again, when I've seen people do back tests on random entries, then the higher risk to reward seem to generate more profit, or more likely to generate profit, and a trailing stop seems to be more beneficial than a fixed target. And so I was thinking, what can we do to simplify the trailing stop idea, or at least have an idea when to move to break even? Because when you get, let's say we have a trade here surviving, and a trade here, and a trade here, and let's say prices at this point, and we've got say a 6-to-1, a 4-to-1, and a 3-to-1, leaving all those open like that with no trail or protection in place is fairly uncomfortable. So I'm not saying that you can't just do that, but it's something worth exploring at least. And again, I've seen a lot of good research suggesting that using ATR is good for a trailing stop. And there was one particular article from DailyFX where he tested random entries with a trailing stop, and he used 5 times ATR trailing stop, and he made it into a profitable strategy. So I wanted to have a look at that, and there is, luckily, a lot of people have considered this, and there is actually some decent ATR stop indicators out there. So I just grabbed one of those and stuck it on, and this one is a 4-period ATR stop, 4 times ATR stop. And what I've been looking at is just when you have an entry and the 4 ATR stop gets above your entry, then moving to break even. So I haven't looked at it as a trailing, but using it as a point to move your trade to break even. So this entry here would be, so price would be here when you eventually move this one to break even, and this one price would be, say, up here when this one got moved to break even. Again, I haven't tested this thoroughly. It's just something I'm looking at, and it's a suggestion if you want to run your own tests of something that you could possibly look at. So just to summarize where I'm at, and I'm just looking at this on the Eurodollar daily and the S&P 500 daily at the moment, and it, it looks pretty good, but it demands some more investigation. So in summary, what I'm doing is, on the daily time frame, 200 period SMA to give you the trend direction, taking breakouts of bars that close in the direction of the trend, only adding to lows when price has retraced and moved a reasonable distance. I mean, you can set an amount if you want from your initial entry. Okay, so spacing your add-ons out, and then using this 4 times ATR trailing stop to move to break even, and aiming for a target around 10R. Okay, you can make it 8 or 9. 10's a nice round number. So I'm going to run some tests on this on the daily, and I know a lot of people would love to find something that works on the daily, and so perhaps have a look at this yourself and see if it's interesting or works. That's it for now. There are links. I have posted links on my thread to that article from No Brainer Trades, and if you have any questions or comments, then please leave them for me, and I'll speak to you all soon.